On Friday, we talked about Tesla pulling back to $265 and how I was going to enter a long position, which both of those have happened. I did enter some calls, which we're going to go over in this video. We're going to talk about the Fed meeting that's coming up this week, as well as the decision. We're going to go over what analysts are expecting. We're going to go over the S&P 500, triple Qs, and what some of my plans and trades are for this week. My name is Peter DiCarlo. I've been a full-time trader for the past 8 years. I run a trading community with over 12,000 members, and all of our trading resources are completely free in our Discord community. If you want to follow along with my trades or stay up to date with me in real time, go follow me on Twitter. Now, before we get into technical analysis, I want to first go over the Federal Reserve's decision, and I want to explain to you guys the difference between hawkish and dovish. A lot of words that you will hear when it comes to the world of finance are kind of just bullshit. Hawkish is going to mean that the Federal Reserve is taking a more aggressive approach to cutting inflation. This could be through quantitative tightening. A more dovish approach would be a more lackadaisical or a less aggressive approach to combating inflation. This could be done within lowering rates or pausing rates, as we will probably see this week. The Federal Reserve's two-day policy will begin tomorrow on Tuesday, and analysts are expecting a 99% chance that we're going to stay put when it comes to the decision. So they think that they're going to pause on rate hikes. Only 31% believe that in November that we're going to see a rate hike. And so the big thing this week is not going to be if we're getting a rate hike coming up, but it's more importantly going to be what is the outlook going into November, December, and even into 2024. If Jerome Powell comes out during the press conference and states that they're going to pause and that he thinks that everything the Fed is doing is working out, that they might even be ahead of plans, or that he feels very, very strongly that they have everything under control, we will probably see the markets rally, and I would not be surprised if all-time highs happen within the next 1 to 2 months. On the other hand, on the rare occurrence that we do not see a pause, or we see a very hawkish Fed, because what could happen this week is we could see the pause, but during the actual press conference, we might see Jerome Powell act skittish, be very hawkish, or maybe even give bad guidance. We see this happen a lot when it comes to earnings, which makes trading the Fed decision and a lot of these macroeconomic events makes it very hard, and it's very volatile, which is why for the most part, I stay out of it, except for right now. So looking at Tesla, I want to first state that I have 400 shares of Tesla long-term. I am a Tesla bull through and through, but it doesn't mean that I don't think we can see Tesla pull back significantly. Now, last week I was very bullish. I was trading a lot of calls, and on Friday we were looking at the 65-minute chart, and then me and my buddy Rustic in the Tesla chat section were looking at this rising wedge, looking at 265 to be a support, and I decided I would start going long right around here. So today, as we sold off, I entered a position that I posted on Twitter saying that I'd entered 3 Tesla calls. I plan to add more, but I'm starting my position here and planning to add my final rest, maybe 4 or 5 contracts, down at $260. The reason that I like to do this is that it will make sure that I get the position, and that if we bounce here and we get the run, that I'm at least going to make some profits. But the other upside is that it doesn't mean that I have to be so stressed about getting in at the perfect price. I can kind of drip my way into a position, adding a couple contracts down at maybe 262, and then the final down at 260. Moving back to the 4-hour chart, I will say that if we give up this support level of about 265, which you can see is a very strong level on the heat map, it seems that we will fill this gap from back down here on September 8th and probably move down to $255. All of this would be fine. If we pulled back all the way down, it wouldn't be the end of the world. We'd probably bounce off of this $255 level, which is the point of control. And the point of control is essentially the highest area of volume within the past year, which is very important. We want to be trading with high levels of volume because we cannot move the stock market ourselves. We, like 99.9% of the market, rely on big money and institutional investors to move the market for us. So a pullback down to 255 would not be the end of the world. And if we aggressively sell off tomorrow, I wouldn't be surprised. The time to worry, however, is what I have right here at about 245 all the way down to $240. If we were to break that, that is where we would worry. Now, the reason that we would worry here is that we would break this swing low to swing high, meaning that we would basically negate this trend and the trend line that we've been riding on, moving our way into higher highs. And if this level were to be broken, this means that the trend would reverse. And if you notice how low the volume is on the volume profile, from about 240 all the way down to 200, that would indicate that we would have a very, very high chance that Tesla would drop at least another 20%. And look, it's not a coincidence that the heat map also lines right up at $180 to $190. And this is why trading with these high areas of volume is so significant, because it's plain and simple. Right? I know sometimes these videos can be boring, and I'm not here to entertain you like the rest of YouTube. I'm here to keep you guys disciplined and to make sure that you guys are doing what it takes to become consistent and to become profitable every day. And the truth of the matter is, as we're watching this, we're just waiting for the break north, or we're waiting for the break south. We're watching 245, we're watching 270, 280, and during this whole consolidation time, guys, we can be playing spreads. We can be playing cash secured puts. We can be doing a lot of things. But the big move, the move that I'm really looking for, is the snap of 240 and riding down to 190, or the break above 280. And so in the meantime, I'll continue to play with the trend, which is what I'm doing right now. I'll continue to play with the fact that it looks like the market's going to move to all-time highs. I'm going to play to the fact that I think the Fed is probably going to be dovish this week, but I'm not going to aggressively overload my portfolio. I made about $25,000 last week. This year has been absolutely amazing, and I don't have to fuck that up. And you guys don't have to either. I think that a lot of times we get greedy because we see how much money we can make. We see the opportunity and the potential within the market. But at the end of the day, that can also be a problem. The woman in the red dress from the Matrix, like, that's a real thing. That can happen in trading. It can happen in business. It can happen in all aspects of life. And so what we're going to do is play what's in front of us for now. If we start to break the key levels that we're worried about, we're going to start to play the downside, and I'll start covering my long-term position. But in the interim, we play what we see and we play what's in front of us. I'm moving to QQQ and the S&P 500. It's looking like we can pull down to 360 if we do not get the rally this week. If you guys are part of the private Discord community and get access to all my trades, you know on the watch list that we've been watching this head and shoulders on SPY, on QQQ, and we've been waiting to see if we'll get the push through this resistance level of 380 or this pullback. The truth of the matter is, if we were to pull back to 360, and if we were to break 360, you'll notice that our chances of dropping all the way back down to 320 are substantial. This would be healthy. This would catch us back up to the 200 SMA, but I do not think that that's going to happen unless we saw terrible earnings going into next quarter, unless we saw a very hawkish Fed, and if we saw inflation continue to rise going into next month and the rest of the year. I do think that the absolute worst that we will see on triple Qs going into the rest of this year is about an 11% pullback down to 334 or 340, which is a correction. And when you really think about it, you remove your ego and the greed. I mean, a 10% pullback after a 50% run is not that crazy. It's not that unusual. And to be honest, it's quite healthy. Now, the S&P 500 is sitting here in a symmetrical triangle, which most of the time is a continuation. So obviously, the trend has been up, looking like the continuation is probably going to want to continue to push this to the upside, which is why looking at QQQ, I'm not extremely bearish. I do think it's going to be hard to get through these resistances, but we need to see the break through this resistance level with volume, break through 455 and hold, and I think that we'll see SPY up at all-time highs. A lot of people say charting is bullshit, but at the end of the day, it's really not. If you were to look at this symmetrical triangle and you were to look at this at a psychological perspective and look at every single one of these daily candles as the overall psychology of the market, you would say, okay, the market was very strong, big run up, consolidated, was waiting for earnings because that was the catalyst that everyone was waiting for. We didn't really see anything crazy. We were continuing to wait for another catalyst, which is going to be CPI. Nothing crazy. We're continuing to wait for another catalyst, which is this consolidation, which is going to hopefully be the Fed decision. And we're waiting for a catalyst to either drive us up through that resistance level into all-time highs or back down for about a 10% correction. I hope this video helped, guys. Go check out all of our free resources. They're in our Discord community, and I'll see you tomorrow. Peace.